Good morning. Welcome to the Fiducian Financial Services 2021 Budget Update. Last night, Josh Frydenberg handed down his third budget, and in fact his second pandemic budget. Whilst the budget had a deficit of $161 billion, this was significantly less than had initially been projected in the 2020 budget. In fact, nearly $52 billion less than the original projected deficit. Whilst many of the relief measures that had been introduced in 2020 have been retained, there were also some additional changes to Superannuation and Centrelink. And today we're going to have a look at what some of those relief measures that were retained are and what those changes to Superannuation and Centrelink are. Firstly, let's have a look at some of the tax issues. From an individual perspective, the low and middle income tax offset that was previously introduced has been retained for an additional year. So that's actually been retained beyond the 2021 year and will be in effect for the 21-22 year. This means an additional $1,080 or up to $1,080 for an individual or up to $2,160 for a couple, depending upon what their level of income is. A change that was introduced in the budget is around residency for non-citizens. So at the moment, if you are not physically resident, you don't necessarily get the tax concessions. However, the residency has now been changed that as long as you are physically in Australia for 183 days during the financial year, you will be considered a tax resident from an Australian perspective. The next change or major change for individuals was around education expenses. At the moment, the first $250 of self-education expenses are excluded as a deduction. This is to be removed, and all expenses from $1 will now count for purposes of a tax deduction for self-employment. The next issues were in the corporate side. So from a company perspective, businesses with an aggregated turnover of less than $5 billion per year, so that's most companies in Australia, will be able to claim 100% for the cost of capital expenditure rather than having to depreciate those expenses. That's been retained for another year. The second of the conditions that was retained was the carryback conditions. So carryback losses that occur in this financial year and next financial year can be carried back as far as the 2019-2020 year and can be used anywhere in an offset from 2019-2020 to 2022-2023 tax year. Finally, tax deferred employee share schemes have been changed, and now leaving employment will no longer be an automatic tax trigger. This was introduced hopefully to allow corporates to retain or attract overseas talent, but will have some impact on existing clients who might have deferred employee share schemes, and when the tax on those share schemes will actually now come into effect. Also in the budget, there were some changes to superannuation. The first one of these has been the removal of the $450 per month threshold for superannuation guarantee contributions. This means that all employees will now be entitled to superannuation guarantee contributions, regardless of whether or not they earn more or less than $450 per month. The second change is around the work test. Going forward, 67 to 74-year-olds will now no longer need to meet the work test to make additional non-concessional and salary sacrifice contributions to superannuation. However, if they wish to make a member concessional contribution, they still need to meet the work test. This means that if their only source of income will be investment income, they won't be able to use the concessional contributions to offset investment-only income. They must meet the work test. Also, it's proposed that the non-concessional bring forward rules will also be extended to age 74. Given that this hasn't been extended from 65 to 67-year-olds, this will possibly take some work to get that through Parliament. However, that's the proposal. Finally, downsizer contributions will be extended to age 60. So downsizer will be available for everybody over age 60 as opposed to the current age 65. This will certainly allow additional people to make those downsizer contributions. Other rules around downsizer in terms of ownership for 10 years still apply, and the levels are still $300,000 for an individual, or effectively $600,000 for a couple. The budget also included some changes to Centrelink and into aged care. So firstly, looking at some of the changes around Centrelink, the first one was to do with the pension loan scheme. So within the pension loan scheme, recipients of that potential loan scheme will now be able to take up to 2 lump sums per year. Those lump sums will be limited to 50% of the value of the aged pension that particular recipient is entitled to. The second change is that there is a no negative equity guarantee, which will ensure that any accrued debt under the pension loan scheme will not exceed the value of the property to which that debt was attached. The second key change around Social Security was to do with aged care subsidies. So for childcare subsidies, that's going to increase from 85% to 95% of what's received. In the briefing that's coming out, you will see there's a bit more detail around that in terms of specific numbers, so I suggest you have a look at that to get the actual specifics around the changes to the childcare subsidy. Finally, for aged care, as a result of the Royal Commission, the federal government intends to spend about $17.7 billion in improving and strengthening the aged care system. While most of that will be around providing additional training, access to services and additional staff, they have proposed an additional 80,000 new home care packages, which will go some way to relieving the problems in that area. They're also proposing an increase of $10 per day in government support per person per bed for residential aged care. So with that, I thank you very much for your time. I hope that this has proved useful, and I look forward to seeing you all soon. Thanks for that. Bye for now.